Hey, what is going on, guys? Welcome back to my channel. Another weekly update on the global and financial news, economic and financial news from around the globe, from Australia, and then also a bunch of crypto stuff that we're going to dive into as well. So, the first headline that I want to check out is that Westpac got a $113 million fine. In the scheme of things, that is nothing. Their net profit last year was $5.6 billion, their net profit. So this is an absolute slap in the wrist. And what were they doing wrong? They were charging dead people financial advice fees. They were not disclosing fees to customers. So customers were just suddenly getting a bunch of fees that they didn't know what they were for. They had a subsidiary company that was taking commission payments on insurance premiums, even though commissions had been banned. They were charging 16,000 customers who were likely to be in financial distress, overcharging them interest, and they were only contractually allowed to charge a certain amount. They were charging them more than that. And they were also keeping company accounts open, even though the companies were deregistered, and they were still taking fees from the company accounts. Dogs. Don't expect anything less. The banks, the big corporations, they're a nightmare, mate. I can't believe they get away with this kind of thing. All right, so wage growth stalls, and this is what the RBA is predicting that wage growth will be over the following 12 months after they release their sort of forecasts. And you can see they're always expecting percentage of wage growth to go up, what wage growth increases as a percent to go up. And you can see that it just keeps on falling down lower and lower and lower. And so I really hope that they get this next one right, but it doesn't look good so far, does it? I hope they get the next one right, because wage growth being so low compared to such a high inflation rate is just really stretching people, and it's going to get to a point where it snaps. So CoreLogic showing that the year-on-year increase in American house prices is about 20%, and you can see that it's been at a steady 20% year-on-year change in home prices since the middle of December 2020, and so middle of the year 2021. So it's just been on an absolute tear, and now we've got 30-year fixed mortgage rates at 4.67%. Whereas they were 3.11% in December. So 5 months earlier, 1% and 1.5% less. So as an example of how much that affects someone's repayments, if the mortgage is $400,000, now they will be paying $350 a month more for the next 30 years than if they took out the loan 5 months ago. So people were taking a step back and going, shit, interest rates are rising. Maybe I'll see how this plays out. And it's going to be interesting to see that there's two main things coming in to affect housing prices, in my opinion. And one's the interest rates. People are taking a step back as the interest rates are going up. So less demand, that would have downward pressure on the price. But at the same time, the materials that go into building a house, is the construction prices are going up. So to build a new house is costing more, yet demand for existing houses is going down, and demand for new houses is going down. So it's going to be interesting to see where this levels out. Probably volatility incoming. Okay, into some Russia, Ukraine information here. This guy, Peter Zeihan, he talks about his theory as to what is the main reason Putin is invading Ukraine. And his theory is that there's these blue arrows. There are 9 entry points that if a military was going to invade Russia, there's 9 entry points that they can get through. And so the USSR used to control all of this, and now they don't. And so Peter's theory is that Putin thinks Russia's vulnerable to attack from the military. So he's trying to take control of these entry points. And he's already got Crimea, he's already got Georgia. He's been trying to negotiate with Kazakhstan to take this entry point here. So Peter's theory is he doesn't just want Ukraine, he wants Belarus, Lithuania, Estonia, Latvia, Poland, all through there to be able to plug all of them up. So, it's a big game of chess, a big game of risk, isn't it? And it's going to be interesting to see how it unfolds. It's not looking good for Putin, thank fuck. NATO's donating so much stuff to Ukraine. The amount of weaponry and the advanced missiles and everything that they're getting donated, 4,000 anti-tank weapons and 6,000 missiles, 120 armored vehicles, anti-ship missile systems. Joe Biden sending an $800 million arms package to Ukraine. They're getting loaded up, and I think looks like they're stopping Russia in their tracks, which is just phenomenal to see after what the predictions were, where they thought Ukraine was going to fall in a matter of days when Russia invaded. It's a big country, a big population, and they're getting a pretty decent military as they're bringing all the eligible people into the military to defend, and it's so sad, and I hope it comes to an end soon. All right, into some crypto news. So, Australia is the 8th country in the world to approve a Bitcoin ETF. What does this mean? Bitcoin, an ETF is it's an exchange traded fund, which is like shares in a company are exchange traded funds. And it just means that CommSec holds your shares on the CommSec app. It's registered with the government that this person, Tom Bull, owns X amount of shares in this company, and it's secure and it's insured and it's protected. That's what a Bitcoin ETF will be for Bitcoin. You can buy it like it's a stock it's like it's a share on the stock market, and it means that it can bring in big players that have big amounts of money that need that insurance to make sure that they're not going to buy Bitcoin and hold it on a USB stick. It's too dodgy, or they need that insurance. So it allows people like superannuation, pension funds, to come in and actually start allocating crypto for their clients. So it's a huge step forward for Bitcoin, and the US hasn't had their ETF get launched, their spot ETF get approved yet, but they're on the right track. And there's a technical thing here where a futures ETF got approved in the US using the 3334 Act, whereas all the previous futures ETF were approved using the 1940 Company Act. And the 33 and the 34 Act is what it needs to be, which is what the spot ETFs have to be applied using. So seeing a futures ETF get approved using the older acts, that just means it's more likely that they're getting towards approving a spot ETF. Very technical, but we're on the right track. All right, so straight from the APRA website, they've putting out a crypto assets risk management expectations and policy roadmap. So the main take out of this is that there's consults on requirements for prudential treatment of crypto asset exposures in Australia for ADIs. So assets, deposit taking institutions, basically banks. It's saying, what do banks have to do to hold crypto for their clients and start dealing in the crypto space? And you walk through and it's basically saying, we're expecting certain anti-money laundering things. We're expecting you to have to provide a certain amount of information to your clients so they know the risks, and you have to also protect everything on your end so your shareholders aren't at risk. And this is regulation of the space, and it's great. And they're giving a timeline. So it looks like 2023 as an APRA consultation on crypto assets. So that'll mean that should mean that in the middle of 2023, there's some outlines for banks to be able to hold crypto for their clients. So my guess is by 2024, end of 2023, all of your big banks will hold crypto for you. Now, something which is important is that if there can be a huge difference on your return pending when you get in. And my opinion is, once the Commonwealth Bank and once these big banks are all holding crypto for their clients, I think it's going to be too late for the big gains. And so I'm trying to get into the market as much as I can before it goes fully mainstream, right? It's pretty straightforward, pretty obvious stuff. Now, another thing that is a beautiful sign for the space is crypto startups have raised nearly 12 billion so far this year. So we're up to here, and you can see this hockey stick nature by the end of the year. This one should exceed the year before, and it just shows how much money is flowing into companies in the crypto space. And then what do those companies do? They create products that bring more people in, and so it's a bit of a foresight indicator, seeing all this money from VCs flowing into the space. It's a really good sign for the future. And people, asset managers like BlackRock, which is the biggest asset manager in the world, over $10 trillion in assets under management, is now getting into crypto. So it's talking about how the CEOs looking to offer crypto services to clients as demand raisers, which Larry Fink, the CEO, said in a letter to shareholders on Thursday. But also BlackRock is now investing along with other people into Circle, which is the company that created USDC, the US dollar coin, which is a crypto that's pegged to the US dollar. So now there's 40 odd billion dollars of value in USDC, right? But they get audited to make sure that they're holding 40 odd billion dollars in assets to show that it's backed by something, not just, numbers in the air. So it's got to be real world assets, and it gets audited. So now BlackRock has said that it's going to hold the assets for USDC. So when it gets audited, it's very transparent. The assets that it's holding is very secure. It's a big step forward for BlackRock to come into the space like that. Now there's another one like USDC, the US dollar coin. There's one called UST, which is it's the same thing. It's a stable coin pegged to the US dollar. Let's say the UST market cap's 20 billion now. It needs $20 billion of assets to back it when it gets audited. Yes, we have 20 billion worth of assets to back out our crypto coin. The UST is choosing to back a lot of it by holding Bitcoin. So it's using Bitcoin as collateral to equal the amount of assets that it should be holding relative to the value of the UST. So Terra is buying shitloads. It's meant to be like $170 million of Bitcoin a day it was buying. And they've still got, apparently they can buy up to $3 billion in Bitcoin right now. I think they might be holding $1 billion. So there's a lot of, maybe $1.5 billion they're already holding. So there's room for them to buy a lot more. And all it means is there's demand coming in and there's supply that'll probably never come back onto the market, not anytime soon. So it's great for the future outlook of the price, especially if Terra executes this and it works, and then other people can start to say, oh, we can use Bitcoin as collateral and to back something. It means that other companies might start to follow suit, and suddenly Bitcoin gets used as this pristine capital that sort of backs things. It's just really, really positive. So fintech giant Stripe jumps into the crypto space with a feature that lets Twitter users get paid in stable coins. So Stripe is one of those payment processing platforms. So if you start up a company and have, you're selling underwear online, then there's a payment processor that allows you to take in payments from people and you send the product out. So Stripe has over 3 million active websites that use Stripe. So Stripe getting back into the space. It was in the space in 2017, and then it was too volatile and a few other things, and it pulled out. Now it's getting back in, and it's really good to see these giants getting into the space and providing payment options to people. Now, a couple of things on the Bitcoin price over the next couple of months is that, so looking down here, this is when Bitcoin price was at 3,553, and you can see the articles that were coming out around then when the price was at the bottom of the downtrend after the 2017 rally. So when it bottomed out in 2018, the articles that were coming out were Bitcoin will go to zero. Bitcoin intrinsically inefficient will disappear. That's when the price is at 4,000. Now it's at 40,000. And so you get these articles coming out when there's blood in the streets and people are scared because these articles get clicked on, what's this going to say? And these kinds of articles can make you get really scared in times of uncertainty. And it's usually those moments, the moments when you should be accumulating. If you believe in the long-term outlook of the space, it's these moments when there's blood in the streets that are often the best times to buy, not financial advice. I'm just giving you my opinion. Now, that leads me nicely into the influencers in Australia risking jail for breaking finance tips rules. I believe there's a huge difference between what I'm doing, trying to educate people, compared to what this is referring to. And what it's referring to is stuff like Kim Kardashian promoting some shitty coin that she knows nothing about, saying it can do really well, and they're burnt. She doesn't know anything about this coin. It's just purely she's getting paid, and she's getting paid to promote it. I know the guys that started this token, and they're just fucking some cool kids in New York that are just sucked in money from all these people that are following celebrities, and then they just shoot them and spat them out, and the price is just going tink tink, and it was really unfortunate to see. And that's just not the only example, man. Obviously, there's all these celebrities like Jamie Foxx was talking about Cobbin Hood in 2017. This is what Cobbin Hood did. Yeah, ping ping. It's just outrageous to see. Mike Tyson all in on Solana in January. Bro, Solana was $100 in January. I know people that were buying it at 15 cents. you're saying all in on Solana after like it was at a 60,000% gain. Like these guys have no idea. And you just got to be careful who you're taking information in from, because these guys are just absolutely kooks and they do not know what they're talking about and they're getting paid. So be careful with who you listen to. And again, I'm not giving you financial advice, especially as I go to the price. I'm just giving you my opinion, and I'm also trading one of the most liquid assets in the world, so it's not a pump and dump. Yes, I do own Bitcoin, but so does 15% of the entire world now. So this is where are we? The price, I don't change my mind very often, right? And so last week the price was here, and now the price is here, and nothing's really changed. In my opinion, this was a flagpole down, and then from the flagpole you get a flag. So this is called a bear flag, down into the flag, and 75% of the time this will break to the downside. So to get the price target, you get the flagpole like that, you grab it, bring it across to there. It should be something like that. I'm expecting about a $23,000 Bitcoin at some point in the next 2 months. When I say that, I still hold Bitcoin. I'm still holding say 35% of my crypto money is still in. So if the price just goes up from here, I'm gonna win because I still got money in. If the price goes down from here, I got cash on the side. I'm ready to buy more. Win if it goes up, win if it goes down. It's a place that you can get to that makes you feel so much more comfortable about the market, and that means you're not always checking the price, and you feel good because it's going to be a win-win. So that's all I've got for you today, guys. Hopefully we get some more volatility in the market. It looks like this is going to break out, and my guess is it'll probably come down, break out of this. Let me just get rid of this little flagpole. My guess is we break down. Okay, you can see here there's these wicks coming through there and there. So you could say that is another trend line through there. So I'd say first guess is we break down to there, rebound off that, come back up to this level, hit this level, which is the bottom of the flag, and get rejected from that. Come down one more time, fail to hold, and I think we capitulate straight from there down to about 30,000. Hover here for a second. I don't know if it stays here for too long. I reckon it just gets smashed, and we just absolutely come down to somewhere around here, and then a really quick rebound straight back up to the sort of low 30,000s, and then we find a bit of sideways action, and then we start to make our way back up to new all-time highs. I don't think we make new all-time highs before May 2023, and I think it's gonna be down. If you're accumulating down around like 23,000, and you get one exit at 33, back in at like 25, and then you get a couple of exits over the next year, then you're looking at making some pretty good returns if you can trade it right. So keep an eye on the channel. I'll give you the information that I'll keep you posted on what I think is going to happen. I reckon we're going to have a really good run. Just because the price is going down doesn't mean it's a bad thing. It's the best time in crypto because it's when you can capitalize on the low prices. So a little bit of cash on the sidelines is always going to make you feel better, right? So you can capitalize as the price goes down, if the price goes down. Not financial advice, just giving you my opinions, guys. Have a wonderful rest of your week. Thanks for tuning in, and I'll speak to you guys again soon. Hey, leave a comment down below, subscribe, like, say hello, share it with a friend. I love this stuff, and I really appreciate you watching.